Hey guys, what's going on? Jason here from smarthelping.com, and we're going to look at the upgrade to the website or app subscription startup model. It's a traffic-based model that has conversion assumptions and 5 pricing tiers. So I haven't done any changes to the base logic and how all the assumptions flow. All I've done is added to it. We've added an integrated 3-statement model as well as a formal cap table. And if you didn't know, this is I've done I don't know, maybe 10 or so different SaaS models with different logic depending on there's all kinds of things you can do in the space. But if you want to check out more of those, you can always go to the first similar template link here, as a service business models. It's just the top tab at smarthelping.com under SaaS if you want to check all of them out. This will be available there as well. I'll be posting this to eFinancial Models and Eloquent, and obviously my site, and the link is in the description box below. So what I'll do is go through each tab, give you a quick overview of how everything works, and that'll be it. So first tab, Global Control. This is where you're defining the timing assumptions and some exit sensitivities. So you've got the company name, which this will flow to the financial statements, income statement, balance sheet, cash flow statement. The launch year. This is a major change that I made, which was instead of putting in like the date of the start year, it's just the year. You just put in the year. So that should clear up a lot of confusion that people have had in the past. Launch date, this is automatically just the first month of whatever year is entered here. It's a formula. And then here's a second major change is you can define the end month, exit month, and then separately define if you want to include the terminal value. So that's another change that made a lot of the balance sheet stuff, and I needed better references to make those balance in any case, in any selecting any scenario here and make sure it still works. So you can define if the terminal value comes in or not. If yes, then all that happens is on the last month that you entered here, you'll see an exit value based on the 12-month trailing run rate times whatever multiple you put in here. Also, if you select yes here, it will assume any debt, like if you got a traditional bank loan like this, if you entered anything here, that will be paid off in that month, as well as the fixed assets, if there were any, will be cleared out, and there will be, you can also define a percentage of the exit value or proceeds that are going to be assigned to fixed assets versus other comprehensive income, which is just a little tax thing. Uh, Next part, sensitivities. So for traffic, this is the biggest one. If you change any of these, it will adjust whatever you've entered on the base revenue assumptions tab. Any of these figures, um, for these specific assumptions will the base is what you put on the base revenue, and then the revenue sensitivity is actually what flows to the model. Traffic growth, you can see this is going to affect exit value a lot. That went up by a lot. Um, it also will adjust the remaining equity required, which is what the model solves for based on all the assumptions, startup costs, any burn. Um, this number is the minimum cash position of the entire project. So you need that much equity just to survive above zero cash. These other assumptions don't affect it as much if you were to, yeah, only 4 million on the exit value. But this is good, investors could come in and say, well, I think your assumptions are going to be worse than you think, or what if they're better than you think for all these? And they could compound if you have excellent here and excellent here. It does compound up a bit, and then you start to see more effects of each. Or you could have some things bad, good, and then some things, what if they're worse than expected? Uh, so let's undo all of that. This is the first template I built this in, and I think it's pretty nice. It's a good feature for this. It's one of the reasons why this template's $125 and not 45 or 75. Next up, cash sources, traditional bank loan. This is just flow to an amortization schedule. It'll also flow to the balance sheet. It'll affect the income statement with interest. It'll also affect the cash flow statement with principal repayments. Um, and then like I said, this is the remaining equity required. All the assumptions will then flow into this number to figure out how much cash you need to survive. And then on the cap table, you can define where that who's contributing that equity. And then these are just some ancillary calculations. We've got tax rate. We've got this very nice check, sanity check. So this looks at all these different um, main summaries and makes sure they all are copacetic and matched together and balanced. We're looking at making sure the annual and monthly net income matches, making sure the balance sheet and balance sheet annual always balance to zero, looking at the annual detail against the monthly, the annual detail against the balance sheet cash flow, executive summary to annual detail cash. So this just ensures that all these summaries we've got over to the bottom right here are all matching and jiving correctly. If we go to the base revenue, you can define the start month of traffic, the monthly traffic amount, and the growth of that traffic over time. That's going to be the primary way you sign up customers, and then you can define that by how many of that how much of that traffic converts to free users, what's the churn of your free user pool, how much of the free users convert to paid per month, how much of the direct traffic converts to paid subscriptions, and how much of the percentage of the free user pool is converted to paid users each month. So let me back up. So this one, conversion free to paid, this is if they sign up for free and then they sign up for a paid account in that month. And then this one is to just look at the ending balance of the free user pool, and a percentage of those will leave that pool each month to go to paid subscription. This section determines the percentage of all the users that are signing up for paid subscription for a given month, what percentage of them fall into each pricing tier, and you can determine the monthly price of those tiers down here. You can also change the start month of each tier. And then finally, we've got churn as well for each tier. So that's how you're defining revenue. And then the sensitivities will target that and give you the actual amounts after sensitivities have been done, and that's what flows to the model. If you just select base, then these are going to be the same as these. Then we have fixed assets. You can define the start month of each. We've got broken into sales and marketing section, general administrative, research and development, and then some cost of goods sold. Cost of goods sold we did based on, you've got some fixed items here. You've also got some that are a function of total monthly users, function of percentage of total revenue, and then percentage of monthly traffic. And note on this, you just define the monthly amount per year in each year for all sections, and as well as the start month. You can also change these to whatever makes sense for your situation. Startup cost schedules, straightforward. These will all flow to month one costs. If you put a reserve here, that means essentially when you hit zero cash balance, you'll actually have this much left. And however much you put in there is kind of like your safety net. Traditional debt schedule, this flows through from the global tab. Cap table, this is where you can define, well, you'll see the minimum equity required flows into here. You also can define the total shares and the common shares. I did 3 types of shares, common, class A and B, and the percentage of shares that make up each one. Note this is the fully diluted share value of preferred A and B, so you should adjust these assumptions accordingly. Or if you don't have them, just make it 100, 0, 0. The first section is 20 slots for outside investors. This is just outside funds or people you're raising money from. You can put the amount they invested here, the percentage of each type of share group that they own, and then the fully diluted share will populate, as well as the implied valuation. The bottom is a catch-all, which looks at all the cash received from outside investors. We also have insiders section, and these might not have investments, like operators, employees, founders, but they might. And you could define their shares as well here. And make sure, and this will check and make sure you've all adds up to 100% for each section. But like I said, this flows, anything that's not hasn't been raised against the total equity needed will flow into this last overflow slot for outside investors. We've also done a little distribution summary with internal rate of return for each entity based on what's available to distribute each year against the total initial investment. So this cap table is brand new to the template. This did not exist before. We've got terminal value. The only thing you're defining here is the percentage of the exit proceeds that are going to be applied to fixed assets. And again, this is just a tax thing. You've got CapEx if there's any equipment or a building you want to have. The depreciation will flow from here to the income statement, and accumulated depreciation on the balance sheet. You can pick your month of expenditure, the useful life, the cost basis, also value the building at sale if you are including exit proceeds. Now you don't have, if you zero this out, or you don't have to zero this out. If you select no on the global control here, it'll automatically do it in the formulas that reference that if no is selected to not include proceeds from anything. Then we've got some visualizations. So paid users versus free, total MRR, monthly recurring revenue versus total free and paid users. Some metrics, customer acquisition cost, month to payback customer acquisition cost, cumulative cash position, annual revenue versus expenses, gross profit margin, net paid user growth versus total paid user growth. So this is what do we do here? Net paid users, total added paid users. Actually curious on this. Let's check this real quick. So net added paid users. Okay, so that's against anything that's lost. So this is showing the cumulative total paid user growth net, which is after churn, and this is if essentially you had no churn, where you'd be at for each month. Then we've got customer lifetime value, and then just a chart showing kind of an aggregate user and MRR schedule. Distributions, this is where your discounted cash flow analysis is. We've got total cash required here, and then any contributions or distributions will then flow out here. There's a lot of logic that I built to make sure this always makes sense no matter what the cash flows result in. You'll see each year's positive monthly cash flows in this row, each period, monthly period negative cash flows here, and then this will show how much equity is remaining. Again, everything's used in the first year. So what's actually distributable, since we already had this equity contributed, is the 70,000 for year one, and then 1.2, 4, 6, 12, 97. If you were to have for whatever reason, a cash outlay in one of these future years, it would just, assuming there's no more equity left to use, it would just offset against the positive cash flows to flow into what's available to distribute. So then we got internal rate of return for the project, as well as net present value. We also split this into investor and owner, or this is essentially insiders, their internal rate of return and net present value, as well as this would be outside investors, and then this would be inside investors, operators, employees, what theirs looks like for net present value and internal rate of return. Executive summary is a nice high-level view of all the revenues from the different tiers, cost of goods sold, gross profit, expense categories, EBITDA, all the cash flow items, after-tax cash flow. Now, this used to be kind of the final summary that you would have, but now that we've added formal financial statements, which we'll get to, and that kind of breaks it down into more just a formal style. The monthly and annual P&L details show all the monthly happenings between how the free pool's changing, how the paid pool's changing, the tier 1 through 5 levels and their revenues. This is just the detail of all the assumptions on the same timeline. Fixed costs. This does drive down to EBITDA. It does go further to final cash flow after all activities. But again, this is not as formal as like a cash flow statement, which we have now built. Uh, Income statement. Here you go. Revenue, cost of goods sold, OPEX, EBITDA, depreciation, getting down to taxes, net income. And annual is the same thing, just on an annual basis. You see the balance sheet. And this was fun. If you watched the live streams, I'll link them in the description box below. I actually built all this live, so that was fun. Um, Balance sheet, monthly, balance sheet, annual. There is no inventory here. You don't need that. Cash flow statement, monthly. So you've got 3 items: operating activities, investing activities, financing activities. All the assumptions can now be distilled down to their formal categories in this. You can see the net change in cash each period, monthly and annual. And that's it. That's the whole model. Hope you guys get a lot of value from this. And again, just check out the description link in the bottom to purchase. And I will see you guys on the next one.